These two trades actually happened during last Friday and during the European London session. That's the two trades that I had, and one ended up being a -1R, which is losing trade, and the other ended up being a break-even trade. So in this video, you are going to find out one of the most common mistakes in day trading, and certainly that costs a lot of money for the traders, and I certainly guilty to this as well. So you might want to reflect this on yourself as well, and let's just pay attention to the trade review section. Hi, my name is Ming Jong, and welcome to another episode of the daily market analysis for the S&P 500 E-minutes futures for the session of 9th of November. So in this video, I'm going to share with you the market recap from yesterday's session and also trade reviews, which I mentioned earlier on, and that will include the entries, the exits, and also the rationale behind. And going forward, I will definitely share with you my trading plan for the session later together with the levels that I am watching. Alright, so let's just get started. So let me just get down to the daily time frame and let's start from there. So last Friday, I think if I remember correctly, that's relatively bullish because, let me show you and zoom in a bit. Let's take a look here. So this is last Friday and the volume is relatively normal, same as the previous session. We do have a reaction down, but eventually closed near the high. So definitely there is demand come in, some buying happening there, and eventually you can see that the buying actually just reflected in today's gapping action. So today we have a gap up and then breaking out of the previous swing high resistance here. So which I will elaborate a bit more in the later part of the video during the current market condition. Alright, so let me just get down to the hourly time frame and let's talk about what's happening from last Friday. So you can see that this is last Friday session during the US session about 10:30 p.m. at my time zone. So the reaction actually happened during the Globex period, during the Asian throughout the European London session. So I guess we do have some of the news event happening right at the European London session at about 4 to 5 p.m. at my time zone. So we see this immediate breakdown followed by a quick recovery and another test, and eventually during the US session they actually start a move. So eventually just close near the high of the session. So which is not too bad, relatively overall is bullish. And let me just quickly get down to the 3 minutes time frame, and I would like to show you two of my trades that actually happened during the European London session on last Friday. And I did make a mistake, and it's quite a common mistake that actually happened to me as well. And I think that actually happened to a lot of traders as well, because I just hear a lot of people saying they do the same thing as well. But certainly I'm guilty on this because that already happened several times to me. One of the disclaimer here, but this mistakes, actually you need to have an active trade management strategy. So what I mean is actually you need to manage your trade actively rather than just set a stop loss and then walk away. So if you are that type of the trader, just set a stop loss and walk away, then this type of mistake won't apply to you, because they actually apply to the active trade management traders. So you can see that these are my two trades. I need to walk you through straight, and I think by the time that you realize that I got stopped out, then you will notice the mistake. So before I do that, let me, as usual, give you a bit of the context. So that's the previous session. You can see that during this active volume, and this is the Globex period. And subsequently, you can see that Right at this European Asian London session, we have seen this kind of the reaction, and seems like forming a maybe a wedge, descending wedge. But if we just take a look at this horizontal type of resistance, we notice that this is the immediate support level. So we have a breakdown happening here, but there's no continuation to the downside. In fact, it just formed a trading range and eventually just climbed back up. So overall, if you just look at it as a falling wedge point of view, or look at it from a no follow through to the downside, in fact, it's just coming back right here, forming a accumulation structure, is bullish. So my bias at that point was to go long. So I think my entry was somewhere around here. That's pretty much based on this little structure, this trading range as a accumulation structure, and we have the breakdown but no continuation to the downside. So effectively we just forming accumulation structure and breaking out, followed by a pullback. And the reversal actually happened here, so at this bar. So right after the close of this bar, this bullish bar, I just entered long, and you can see that the timing is very good, relatively well, because right after I entered the long, right after this breakout, pullback, reversal, and we can see that there's an acceleration to the upside, just touching this previous swing high resistance, and with the spike of the volume. And I did not really take profit immediately, because that's the mistakes. I wasn't looking at the chart at all. I think I was busy talking on the phone or outside of my room, definitely not watching the chart. So that is definitely a mistake for myself, because my style of trading is doing the active trade management. I watch the candle, buy candles, and move my stop accordingly, and also move my stop loss, trail my stop loss. So that's how I actually manage my trade. That's why I mentioned that if you are not the active trade management type of the trader, instead you just put your stop loss and you walk away and wait the trade to play out, then that's definitely not for you. Then that won't be a mistake. It's just a different trade management style. But for me, as I always actively manage my trade, my stop loss, so definitely by not looking at the chart, I definitely make a huge mistake, because I was caught out on something else, not in front of my computer, and I think I was also talking on the phone as well. So definitely I wasn't aware of what's happening. So eventually you can see that it's a very straightforward trade. We see the supply spike together with the volume, but unable to commit above this resistance level formed by the swing high level. And eventually we have seen this supply emerge together with the bearish results. So in theory, if I am in front of my computer, then after the close of this bearish bar, then that should be my exit point. So definitely miss out this good exit. So if I exited there, then I think at least I will have about reward to risk ratio of about 1:1. But eventually you can see that I got stopped out at my stop loss right there, and we can see that after the kind of the uptrust type of action with the spike of the supply, and eventually this down move comes with the increasing of the supply as well. So definitely this is bearish. So by the time I got back to my room, then I discover, okay, got stopped out right there. Oh well, I guess that happens sometimes. So the other trade was, I think, happened somewhere around 5:30 p.m. at my time zone. So after I got stopped out, and I keep watching this, and this is how I look at this. So I say that's the previous swing high, this is the uptrust, false breakout with the increasing of the supply, and eventually just take a look at this downswing. So this downswing is the greatest downswing that we have seen out from the previous range. and eventually you see that it actually break out from this immediate support level. Now once it's broken and become the resistance level. So breakout, pullback as a backup, test now become the resistance level, and we also see some of the rejection tail here. You can see some rejection tail, supply tail. So at that point, I think that's a good opportunity for me to go short, because that's a typical or classical pullback, and then I can just enter once it just turn around. So you can see that that's my entry. So right after this bearish bar, I just enter short. I just enter short, and with the anticipation to ride to the downtrend. And the timing again is very good, because you can see that right after this bar, only wait for another bar, doji bar, and subsequently we have seen this big bearish bar, and then followed by the breakout here. So I was happy at that time once I saw this breakout, because that breakout actually confirmed this sign of weakness, and this is kind of the early entry, and that's the breakout that I'm looking for. So that actually provides the ultimate confirmation it's going to go down. And in fact, right after this breakdown, you can see that it just keep going down and almost touch the previous I think that's the non-RTH low. And if I just zoom out a little bit here, I think that's the previous consolidation area as well. You can see that. So that's the consolidation area, and that kind of provide a bit of the support to this. So at that time, I only just move my stop. So I just trail my stop, I think right above this bearish candle, that breakout candle. So again, I make the same mistake. So I let the reversal happen and eventually just go all the way up, just because that I wasn't in front of my computer again. So I think on that day I was somewhat busy and wasn't able to commit in front of my computer to stay on looking at the chart and trade accordingly. But fortunately, I do move my stop to somewhere around there. That's kind of a bit break even, if not a very minor profit here. So you can see that right after the sell down, so we have a breakdown here and then followed by a continuation to the downside, but we do not have the follow through. In fact, we have a pretty much a reversal. So at that time, I think that is not at that time, I think after I reviewed that, I think that that's quite logical, because sometimes we will just see this kind of the action, breakout, pullback. So this is another breakout, another pullback. So I think it's quite normal to see this kind of pullback to test this breakdown bar. But if I were to trade on a spot and actively manage my trade, I think this breakout bar could be my exit, because right after the test, forming a tight consolidation here and then followed by this breakout. So I think that could be my early exit to lock in the profit. So instead of having, I think I could have got around 2 point something reward to risk ratio. If I exit somewhere around here, that's bullish candle, then that could end up being about 1 to 1. So reward to risk ratio of about 1 to 1. So it's a lot better than just a very minor profit or just break even here. So the lesson learned, I just need to commit and stay in front of my computer and just actively manage my trade. So if I do it like every day, this type of thing happen, then that could definitely eat up a lot of my profit. So definitely I will just need to fix this as my mistake. So you might want to take a good look at yourself. Are you making this mistake? Maybe you can just comment it below. Alright, so let me get back to the hourly time frame and let's talk about the current market condition. So right now, I think we are just breaking out. So right after the breakout, a pullback is happening. So the immediate resistance level is still at about 35.40. That's based on the previous swing high. So we still have one more level. That's the all-time high level at around close to 35.90, or I think it's 35.87 to be precise. So right now, if we just pay attention to the closed level, then definitely 35.40 is a level to watch, because that's the previous swing high level now become the support. So you can see that this morning during the Asian session, we have a gap up here, and that actually break out of this 35.20 immediate resistance level, and then followed by a continuation to the upside, and eventually we see the shortening of the upward thrust, so suggested the up momentum is fading, and eventually we see this type of the reaction kick in. And now I think that the levels that we can take a closer look or to bet around is the support level or the support area, 35.40 to around 35.20. So this support area formed by the previous support level, and also the now turned the previously as a resistance now become a support. So 35.20 to 35.40 could be a good levels areas to watch for reversal. So if you can just come down and then reverse, so wait for the confirmation and can trade accordingly. Otherwise, then it could probably just get back and then keep breaking out and continue to the upside to test the all-time high level at 35.87. So everything still looks very bullish. So right after the US election, the president already confirmed as Biden voted as a president. So we see this kind of the gapping action. So overall, I'm still looking to long for day trading. Otherwise, unless that we see the spike of the supply with some kind of the uptrust action, go back here or even fail right here, then that could become a short entry. So either way, that is fine to me. But I still think that there's a greater chance for the momentum to push through, leverage on the support, and then reverse to keep pushing up to test the all-time high before we see some kind of the reaction. So that's my view for the current market condition. So this is the end of the video. Hope you enjoyed it. So if you'd like to learn more on how to increase your winning rate, definitely check out the video that show on the screen right now. And do remember to subscribe to my YouTube channel so that you get more quality videos like this. So thanks for watching. I will talk to you soon.